That's right. Walta Main has built a UBIT calculator. This calculator takes all of the confusion that surrounds passively investing with an IRA or 401k. I've visited the Bigger Pocket forums, participated in so many Facebook groups, and listened to endless hours of podcasts. Whenever anyone brings up the idea of passively investing with your retirement account, all they ever say is, "What about UBIT? You shouldn't invest passively, the taxes are prohibitive. You'll lose all of your returns because of UBIT." There's a ton of doom and gloom surrounding this concept, which is why I built Volta Main and spent hundreds of hours building, testing, and perfecting this UBIT calculator. If you've ever passively invested before or been on a sponsor's email list, they always send their expected returns with each and every opportunity, but nobody can provide the story of how much you'll actually be left with when all is said and done. While it's way too complicated to figure out taxes for normal cash investments, UBIT is based off the trust tax rate table, which means there's a finite number of ways that things can play out. This is what led to the development of the UBIT calculator. But before we jump in, let's just clarify two quick things. First, if you use your existing IRA or 401k to passively invest, this applies to you. And second, let's clear up the concepts of UDFI and UBIT. When you passively invest with an IRA, you earn UDFI, and then your account pays UBIT. UDFI is income, UBIT is tax. The calculator can handle refinances, interest-only periods, varying investment amounts. It's set up to adjust for quite a bit. So let's jump into what the calculator looks like and how it can help you gain a better understanding of this concept. So here's what the calculator gave us for a property we currently operate in Texas. Let's go through these line by line. Up top, we have the total amount invested, as well as the overall percentage ownership of the entire limited partnership. Just below that, we indicate years in which there is a refinance or sale. And then we dive into the numbers. The first line shows the total capital still remaining in the property, with the second showing a consistent ownership of the deal, regardless of how much capital is being returned to an investor through a refinance. Just below that, we have the returns that are doled out from the property each year, with the cash-on-cash returns below. These are the amounts that a solo 401k or EQRP investor would be able to keep because no taxes need to be paid from these accounts. And below this, we have the results of the calculator, which indicate the overall UBIT taxes that must be paid each year. In this example, we can see that no taxes are paid for the first 4 years, and then when capital gains are earned through a sale in year 5, we pay UBIT. The resulting after-tax cash flow can be seen just below, again with cash-on-cash return following. And to finish, we have the total capital that is returned to an investor through refinance or sale. By year 5 on the line below, we can see that no funds are left in the property. We have a concluding line below showing the differences between pre- and post-tax results. Remember, the top line is for solo 401k or EQRP investors, or even cash investors before having to pay taxes, and the bottom line is for IRA investors. Then we have our initial returns to close things out. The first 3 lines show pre-tax figures, with the bottom 3 showing the post-UBIT totals. To simplify things, we can look to the far right to see the overall impact that taxes had on our investment. I know there's a lot to this, and there are numbers everywhere. The goal here is to provide investors with as much information to make the best possible decision when investing. All Main Street investors receive the results of the calculator before each investment opportunity, and results can always be tweaked for specific investment amounts. I hope you enjoy this run through of the calculator. If you have any questions about it, I'd be more than happy to help.